Okay, so this chapter covers one of my favorite topics, cost allocation and activity-based costing. These are managerial accounting concepts that we apply to finance in ways where we look at the overall costs and allocate our overhead. And so that is really the concept of activity-based costing and cost allocation. So there's a couple of methods for cost allocation that I want to discuss. But first, let's talk about product costing with respect to allocation methods. Now, as you would expect, product costing is where we determine the cost of a product. Right? And so as you already know, the things that we've been talking about all semester long, product cost consists of direct materials, direct labor, and factory overhead. Now, with respect to product costing, we can directly trace direct materials and direct labor to each product because this is the amount of material and the amount of labor that go into the production of each product. We can directly trace that, meaning it's a direct cost. However, we also know that factory overhead, on the other hand, is an indirect cost that we allocate to the products. And so we do this by a couple of different methods. And so we're going to talk about the three primary methods. So with respect to allocating factory overhead, there's three primary methods that we utilize. The first one is a single plant-wide method. This is where we essentially take the amount of overhead and divide that by the number of units being produced. And we mass allocate the overhead rate to each unit that way. A second method of, and I know we talked about that in earlier chapters. We also talked about another method called multiple production department rate method. You probably remember this when we have multiple departments in an organization. One example that we used in class a while back was furniture production. I'm sure you remember that. We had the department that created the frame. We had the fabrication department. We had the finishing department in the production of furniture. Those were multiple departments, remember? And so with that, we allocated factory overhead to each department in the process. So we talked about that. The third method we have not yet talked about, which we will talk about in this chapter, is the activity-based costing method. This is where we use cost drivers to allocate factory overhead to the production of products. And so we'll talk about that over the next few slides. So let's talk a little bit about each one. We'll recap on the single plant-wide rate method. We'll also recap on the multiple production department method, and then we'll talk in detail about the activity-based costing method.
Hey, Professor.
Yes.
What edition is your book? Because in the 14th and the 15th edition, it says lean manufacturing. And I don't see this chapter in my book.
You don't see this chapter in your book?
Yeah, it says something else. I don't see. Yeah, it says chapter 26. It says lean manufacturing and activity analysis. That's the 14th and the 15th edition. So
this is the 13th edition.
Okay.
So that would be why. But this should be even in the 14th and 15th edition. It may be under a different chapter.
Nope.
No?
26 is the last chapter in 14, and then it says lean manufacturing and activity analysis, and then it says the balance scorecard and corporate social responsibility.
That is fascinating. I'm surprised that they removed this chapter. All right, well, take good notes, my friend.
Gotcha.
All right. Because this really is a very important concept. I'm shocked that the textbook publisher Cengage removed this from the later editions of the book. So that's fascinating. I appreciate you bringing that to my attention. That's shocking, to be honest. Okay, so so as we just discussed, there are three primary methods of allocating overhead. There's a single plant-wide method that we talked about in earlier chapters. That's where we simply took the overhead rate, the overhead amount, and divided that by the production levels of product production. The units. The multiple production department is where we allocated the overhead to each respective department. And we're going to talk in detail about the activity-based costing method. Now, companies need to make a selection, especially production companies, need to make a selection of which allocation method they're going to use, because this information will affect the total product cost based off of how we allocate our overhead. And so management needs to understand this concept because this has a significant impact on the total product cost. Okay, so first let's touch back on the single plant-wide factory overhead method. We talked about this in earlier chapters. This is where we just simply apply the overhead method across the company. So under the single-wide method, factory overhead costs are allocated to products using only one rate. So regardless of what product is being produced or which department it belongs to, it's all the same. It's just the one rate. That's why they call it single, right? So let's look at it from an example. This is a really good example, and this example we're going to see throughout the chapter. So the first thing that we do is we assume this company is manufacturing both snowmobiles for the winter, of course, and lawnmowers for the rest of the year in a single factory. The factory overhead has a total budget of $1.6 million for the year. The company has also budgeted for 20,000 direct labor hours. Okay. So here's how the company has budgeted the labor hours for each segment, for each product being produced. For the snowmobiles, the company is expecting to manufacture 1,000 snowmobiles for the year. The company expects that each snowmobile will take 10 hours to produce. And so therefore, we've budgeted 10,000 hours for the year for snowmobile production. For the riding lawnmowers, the company is designated they're going to produce 1,000 mowers. It takes 10 hours to manufacture each mower. And we budgeted 10,000 labor hours to produce all of the riding mowers for the year. So that gives us 20,000 total labor hours for the year for the company. So under the single plant-wide method, we take the $1.6 million, which is our total budgeted factory overhead, and we divide that by the budgeted plant-wide allocation base to get the single plant-wide factory overhead rate. So I can already hear you, Dr. B, what is a total budgeted plant-wide allocation base? Well, okay, so the base is a measure of operating activity in the factory. These commonly include things like direct labor hours or direct labor dollars or machine hours. In our example, since we just talked about the labor hours, we're going to use labor hours as our activity base. And so the company allocates the factory overhead using the budgeted direct labor hours as the base. So going to figure out what is our single plant-wide factory overhead rate, we take the total overhead that has been budgeted for the year, that's 1.6 million. We divide that by the 20,000 direct labor hours that have been budgeted for the year. And that gets us to $80 per direct labor hour in overhead rate. Everyone understands the concept so far?
Yep.
Great, wonderful.
Didn't we go over this before?
We did. We talked about we talked about this single overhead rate, and I want to say it was like 2 or 3 chapters ago.
Cool.
So yes, we did. So this is just kind of a recap, and the reason why we're recapping this as well as the department rates is because these two concepts really help us to better understand activity-based costing, and this kind of puts it all together, if you will.
We're doing the department rate after this?
Yes, we are. That's right. Yep. So the company has a plant-wide rate of $80 per direct labor hour to allocate to the factory overhead on snowmobiles and riding mowers. So how do we compute that? We said that we have $80 per direct labor hour for each, for the whole factory. So therefore, it's $80 per labor hour for the snowmobile production, as well as the riding mower production. We had already said that it takes 10 hours to manufacture one snowmobile and 10 hours to manufacture one riding mower. And so we'll take our $80 per hour for the overhead rate. We multiply that by the number of hours it takes to manufacture each unit. And that gets us to $800. That's $80 times the 10 hours. So therefore, each unit should have $800 for their overhead. So $800 is the amount of overhead per unit. Make sense so far? Yes? Great. Okay, so let's look at it from a picture perspective. I like pictures. Okay, so we have the $1.6 million factory overhead for the year. We have determined our direct labor per hour overhead rate per hour is $80. For each unit, it's 10 hours of labor. So again, the overhead rate of $80 per hour times the 10 hours it takes to create each unit is $800 per unit. So nice picture. And that's the same, again, since it's plant-wide, that means it's the same regardless of what I'm producing. We spread that across all of our units. Does it make sense? Yes? Great. Okay, so in summation, there's some advantages of doing this. It's because the advantage of doing this is it's really easy and it's very inexpensive to implement this type of allocation of factory overhead rate. But of course, there are some disadvantages to doing this. One is that the rate assumes that the factory overhead costs are all consumed in the same way by all products. And therefore, the validity of using this type of method may not be as accurate as it could be. If a company manufactures products and consumes the factory overhead rate in different ways, a single plant-wide method may not accurately reflect all of the overhead costs to that respective product. And that's where factory overhead for multiple departments comes into play. So now let's talk about the departments. And again, we covered this in earlier chapters, so this is just a recap of what we explored in earlier chapters. So for multiple departments, when production departments are different significantly in their manufacturing process, the factory overhead costs are normally incurred differently in each department. It's kind of like that example I gave in that earlier chapter. We talked about furniture manufacturing. You have the framing, you have the fabrication department, and then you have the finishing department. Those are all different departments. And so, as you know, when it comes to different departments, the allocation is different. It's slightly different because each department has its own activity level. And so, in this case, the factory overhead costs may become more accurately allocated to multiple production departments for the overhead costs. The multiple department overhead method uses different rates for each department to allocate factory overhead costs to the respective products. So the multiple department factory overhead method uses different rates for each production department to allocate factory overhead to the cost of each product, just as we just said. In contrast, as we already know about the single plant-wide rate, it uses only one rate for the whole factory. So in other words, multiple departments, each department has its own rate. In a single plant-wide method, there's only one rate for all departments. So here's how it looks in contrast. So the single plant-wide rate, one amount gets applied to the whole company. With multiple departments, you got your fabrication department, you have your assembly department. Each department has its own rate, and both rates are applied to the respective products. So let's look at it from our example. So we assume the company is using the following two production departments in the manufacturing process of snowmobiles and riding mowers. You have the fabrication department, which cuts the metal and shapes the products. And you have the assembly department, which manually assembles the pieces into the final product. As you know, we have an annual budget for factory overhead of 1.6 million. And the company divides this amount into the fabrication and assembly departments. The fabrication department has 1,030,000 of those dollars, and the assembly department has 570,000 of those dollars. And as you would expect, both of those added together equal the total budgeted amount of 1.6 million. So how do we figure each department overhead rate? Again, we learned about this in earlier chapters, so just kind of a recap. Each production department factory overhead rate is computed by taking the budgeted department factory overhead divided by the budgeted department allocation base. So looking at our example, for the fabrication department, the budgeted department factory overhead was 1,030,000. The base is still going to be the direct labor hours, and we said that for this it's 10,000 direct labor hours. So 1,030,000 divided by 10,000 direct labor hours gets us to 103 direct labor hours, $103 for each direct labor hour for the fabrication department factory overhead rate. And for the assembly department, we got 570,000 was the allocation for the budgeted factory overhead for this department. 10,000 direct labor hours was our base. That gets us to $57 per direct labor hour for the assembly department for overhead. Make sense so far? Yes? Wonderful. Okay. So going a little bit further, yes, go ahead, Elias.
No, my bad. I was just saying, yeah, I walked away. Yeah.
Oh, great. Wonderful. Thank you so much. I appreciate that. Okay. So as we know, it takes 10 hours to manufacture each unit. Okay, so 10 direct labor hours are required for the manufacturing of each snowmobile and each riding lawnmower. These 10 hours are consumed in the fabrication and assembly departments. In fabrication for the snowmobiles, it takes 8 hours, and in the assembly department, it takes 2 hours, which is giving us a total of 10 direct labor hours. For the riding lawnmowers, it's the opposite. The fabrication department only needs 2 hours, and the assembly department needs 8 hours, giving us 10 hours per riding lawnmower. So looking at this chart here, and let's take a look at each one. For the snowmobile, they said they take 8 hours for the fabrication department and 2 hours for assembly. Based off of the calculations that we've done already for each department, it's $103 per direct labor hour in fabrication and $57 per direct labor hour in assembly. So what we do is we multiply across. 103 times 8 is 824. That's for the fabrication department for the snowmobile. Then we have $57 per direct labor hour times 2. That's 114. For the assembly department, we add those two together to get $938 of total factory overhead cost per snowmobile. And we apply the same concept to the riding mower. 103 times 2 is 206. 57 times 8 is 456. And you add those two together to get us to $662 per riding lawnmower for the factory overhead cost. Does it make sense? Does anyone need any clarification on this?
I got it.
Got it. Wonderful. Very, very good. It's a good example. I like it. So how does it look, again, graphically? So for the overhead fabrication department, we allocated $1,030,000. For the assembly department, the overhead allocation was $570,000. We then have the allocation $103, 8 hours for the snowmobiles, 2 hours for the lawnmower. In assembly, 2 hours were allocated for the snowmobile and 8 hours were allocated to the lawnmower. This is just kind of a nice pictorial representation of how each department is allocating the respective hours and dollars for each unit. So now that we talked about the department level, we also need to explore this concept called the distortion of product costs. Because as you would imagine, with the word distortion, it represents the differences between the methods. That's what the term distortion means in accounting. It means difference. And distortion is represented by the difference of each method of allocation, the allocation of factory overhead. So we're going to look at the differences between the single plant-wide method and the multiple department allocation method. The difference is for the factory overhead, each snowmobile and riding lawnmower using the differences are shown between the single plant-wide method and the multiple department method. So here's how it looks. In the single plant-wide method, we had $800 for each unit, regardless of what unit it was, right? In the multiple department method, we had $938 for the snowmobiles and $662 for the riding mowers of allocation of overhead per unit. Now we can see that led for a negative difference for the snowmobiles of $138 and a positive difference of $138 for the riding lawnmowers. The good thing is this really isn't balanced. So ideally, the company would probably be okay if they used either method, because you can see that there would be no difference after you add these two together. So what does this tell us? It says the snowmobile is not allocated enough cost and thus can be undercosted by $138 if they were to use the single plant-wide method. But in contrast, the riding lawnmower would have been, there would have been too much allocation using the single plant method, leading to a positive difference of $138. So again, looking at this, we can determine that if the company selected either the single wide plant method or the multiple production department method, the company probably would have been okay because the two would have canceled each other out. But if the company was only producing one type of product, then there probably would have been a problem. There would have been a problem for either, really. So essentially what this says is it's more granular if you use the department method rather than the single plant method. We'll talk about that a little bit further. So these types of distortions are caused by averaging the differences between the high factory overhead costs in the fabrication department and the low factory overhead in the assembly department. So using the single wide plant rate, we assume that the factory overhead is directly related to a single allocation base for the entire plant. However, using the single wide plant method is not realistic for our example company. And the reason being is because the product costs are significantly different for both the riding lawnmowers and the snowmobiles. So following the conditions, there's two conditions that a single plant-wide factory overhead may cause a product to be distorted. The first one is that differences in production department factory overhead rates. These differences, some departments might have higher rates than others. And the issue in condition 2 is that differences among products and the ratios of allocation the departments across the departments. What this says is that some departments have a higher ratio than others. And this, of course, would also cause distortion. So that's why in this case, using the department level for allocation of factory overhead, it would be much better than it would be using a single wide plant method. So we talked about ratios in this example. So for condition 1, we see that the company uses a factory overhead rate in the fabrication department of $103 per hour, whereas in the assembly department it's $57 per hour. And in the second condition, we can see that the fabrication department has 8 hours of direct labor, and in the production, it's 2 hours, right? So looking at this, we can figure out the ratios, the ratio allocation for the departments. So for direct labor hours for the snowmobiles, it's 8 hours. Direct hours for the riding lawnmowers is 2. That gives it a 4-to-1 ratio in the fabrication department. And then we can also see the direct labor hours in the production department. You got 2 hours for the snowmobiles, 8 hours for the riding lawnmowers, and so that would give it a 1-to-4 ratio. So these ratios are really used in comparing the primary differences between using a single plant-wide method and the department method. So this is just a nice graphical representation of the two. So in the factory department, we had 103 direct labor hours. Assembly had 57 direct labor hours. So that's the comparison in condition 1. In condition 2, looking at the ratios as a comparison. So for the snowmobiles, we had 8 hours of direct labor and 2 hours of direct labor in the assembly department. And then the opposite was true for the lawnmower, which gives us the ratios 4 to 1 and 1 to 4. So how do you get 4 to 1? Well, you're taking 8 divided by 2 to get 4 to 1, right? And then 2 divided by 8 to get 1 to 4. And so we can see how this basically represents how the allocation is represented in terms of labor hours for each department. Okay, so that was a recap on department allocation for factory overhead. Now, let's talk about the meat and potatoes of this chapter, and that's activity-based costing. We did touch a little bit on activity-based costing in earlier chapters, but this really puts everything together for us in a holistic approach. So activity-based costing provides an alternative approach for allocating factory overhead that uses the multiple factory overhead rates based on different activities. So instead of taking factory overhead and applying it to the whole company through the single allocation, and also on an alternate, instead of applying it by department, we can apply it by activity. So activities are the types of work or actions involved in the manufacturing process or service process. Think of an activity like your job. At your job, you have different activities that are performed at your job. Okay. Looking at we used an earlier example in furniture production. The activity base for the assembly could be screwing in the legs into the frame of the sofa. That is an activity. Okay. Welding the frame together is an activity. Fabricating is an activity. So if you look at these various jobs, these jobs are activities. So under the activity-based costing, factory overhead costs are initially budgeted for the activities. These are sometimes called activity cost pools. Actually, most of the time they're called activity cost pools. These activity cost pools include things like machine usage, inspections, moving things around, production setups, and engineering activities. In contrast, when using multiple production department, factory overhead rates are used. Factory overhead costs are first accounted in the production departments. So let's compare the multiple departments versus using activity-based costing. We can see that in the departments we have our respective departments. We have our fabrication department and we have our assembly department, right? And then these two have their own respective rates that are applied to the products. Whereas in activity-based costing, we take each activity and allocate it to the products using based on their each individual activity rates. So one activity could be, again, creating the frame for the lawnmower. Another one could be putting together the various parts of the lawnmower engine. Another one can be painting it. Another one could be, so forth and so on, whatever they are. But we can see that instead of it being by department, this activity-based costing is more granular. It's kind of like looking at each detail of what goes into each process, right? And so we can apply activity rates to each activity, which all go into each product. So let's look at it from our example perspective. So here are the various activities. we have fabrication, assembly, setup, quality control inspections, and engineering changes. So in fabrication, we have fabrication costs that consist of metal cutting and shaping the product. The activity base is machine hours, right? Or machine, it's because it's machine activity. It's machine intensive, sorry. And in assembly, we have manual assembly of each machine into its final product. That, of course, as you would expect, is labor intensive. And so the activity here would be labor hours. So fabrication, we have machine hours. And assembly, the activity base would be labor hours. And another activity is setup. Setup consists of changing out the tooling and machines and preparing for making a new product. We talked about this in an earlier example. We talked about setup from a production standpoint where we did production runs. You remember that? We did production runs, and each production run we would have to retool our assembly line. So it's kind of like doing batches. Versus another example that we used was serial production, and that it was continuous. So when we do runs, we have to do setup each time that we do a new run. And so a setup, each production run requires a new setup. And so there's the cost, the activity-based cost here would be the setup. Then we have quality control inspections. This is an activity where we inspect products for conforming to specifications. And the inspection requires a product teardown and reassembly. This is kind of like every 100 units, we would do a quality control. And in quality control, we disassemble the product and reassemble it to verify that the specs of production are in spec. And so the activity base here would be the number of inspections. And engineering changes. Engineering changes consist of processing changes in design or process specifications for each product. The base here would be a document that initiates changing a product or process. We call this an engineering change order. Very similar to earlier examples, we talked about purchasing. And purchasing can sometimes be an activity base as well. And as you would think, with purchasing, we purchase raw materials or requisition. In the requisition, the work in process department requisitions from the raw materials department. And in that requisition, there's a requisition order, and that would be the basis for that. So fabrication and assembly are now identified as activities instead of departments. So think of these as activities instead of departments. So as a result, the setup, quality control inspections, and engineering change functions that were previously allocated to the production and assembly department are now classified as separate activities. So here's how it looks. So looking at it by an activity base. For fabrication, we budgeted $530,000. For assembly, we allocated $70,000. For setup, we allocate $480,000. Quality control inspections, $312,000, and for engineering changes, $208,000, which still gets us back to our total allocation of overhead of $1.6 million. The costs for the fabrication and assembly activities are less than other costs where the production, if they were production departments, because you remember that fabrication and assembly were their own departments, making up the $1.6 million. So instead of them being their own departments, we broke them out into activities, which are functions they're all essentially functions of production of each unit. And so we allocate the overhead based on each activity. This is because the cost of setup, quality control inspections, and engineering changes have now been separated into their own activity cost pools. Does it make sense? Are there any questions on this concept so far? Is it pretty
Not
clear?
right now.
Not right now? Okay. It's pretty clear so far. That's good. Okay, so now that we have a very basic understanding of activity-based costing, we need to now explore the concept of activity rates that are assigned to each activity. So the budgeted activity costs are assigned to the products using the factory overhead rates for each activity that we just saw in the previous slide. These rates are called activity rates because they are related to each activity. To compute the activity rate, we take the budgeted activity cost and divide that by the total activity base usage. When you hear the word activity base, it means instead of the allocation base, we use an activity base because it's related to that respective activity. You're essentially just swapping out the term. Allocation base is what we explored in departments. Activity based is in activity-based costing is the base, right? So let's look at our example. So we assume that snowmobiles are being produced by the company and engineers are still making minor modifications to the design. The company has produced riding lawnmowers for many years. The activity-based usage for the two products are as follows. We, again, for the year, we expect to make 1,000 units of each type, snowmobiles and riding lawnmowers. The estimated number of setups in each run, we expect to do 100 setups in snowmobiles and 20 for lawnmowers. The quality control inspections, we expect to do 100 inspections for snowmobiles and 4 inspections for lawnmowers. And the estimated engineering change orders, we expect to modify our design for snowmobiles 12 times, and we'll modify our design for riding lawnmowers 4 times. So these would be our bases, right? These are our bases. So for labor, we again expect to utilize 10,000 hours for each product type for the year. As you already know, for the snowmobile, it takes 8 hours in fabrication, 2 hours in assembly. We expect to produce 1,000 units total for each type, right? And so 1,000 units times 8 hours, 8,000 hours for total fabrication department for snowmobiles. 2 hours, 1,000 units, 2,000, so on. That gives us 10,000 hours for the snowmobiles. The same concept applies for the riding lawnmowers. 2 hours fabrication times 1,000 lawnmowers, that's 2,000 hours for fabrication. Assembly, 8 hours times 1,000 units, that's 8,000 hours. That gets us to 10,000 hours for the lawnmowers. So let's break it down even further. So we had said that the snowmobiles, there's going to be 100 setups, 100 inspections, and 12 engineering changes. And the riding lawnmowers, we said there was going to be 20 setups, 4 inspections, and 4 engineering changes. Now, this is basically a graphical representation of how many changes we're going to do. So we said that fabrication and assembly is 10,000 hours each. Setup, there's going to be a total of 120 setups. That's 100 snowmobile setups and 20 lawnmower setups. 104 inspections total and 16 engineering changes total. Now, what we do here for activity-based costing is we allocate the budgeted activity cost to the activity rate by dividing the budget activity cost by the base. So 530,000 was allocated for fabrication. There's 10,000 labor hours involved here. That gets us to $53 for direct labor for fabrication. For assembly, we allocated $70,000. It's going to take 10,000 labor hours for assembly total. That gives us a $7 per direct labor hour. For the setups, we allocated 480,000. We said there's going to be 120 total setups. That gets us to $4,000 per setup. For quality engineering, or I'm sorry, for quality control, we allocated $312,000. We said there's going to be 104 inspections. That gets us to $3,000 per inspection. And for engineering changes, we allocated $208,000 divided by 16 engineering changes total. That gets us to $13,000 per engineering change order. So again, the concept behind activity-based costing is it's very granular, and we're dividing it. We're allocating everything by activity instead of by department. So here's what we do to get the activity cost. We take the activity base that we used, and this is for, we do this for each type of product, right? We take each activity base that we used. In this case, for fabrication, we used direct labor hours, which was 8,000 for the snowmobiles. We multiplied that by each respective activity rate to get our activity cost. And we do that for each activity. And by the time we're done with each activity, we add them all together. We add up our activities to get our overhead cost for snowmobiles. For snowmobiles, it's $1,294,000. We said that we're going to produce 1,000 of those, which gets us to a factory overhead per unit of $1,294 per snowmobile. Everyone sees how we got there? Yes? Say yes. Okay, good. And so we would follow that same exact principle for the riding lawnmower. And for the riding lawnmower, if the factory overhead per unit is $306. Okay, and this is what it looks like graphically. Again, we have each activity, right? This is the activity cost per unit based on their bases. We take all of these, divide that by the number of units being produced to get our total activity base cost per unit. It makes sense, right? Yes?
Kind of.
Kind of, sort of?
Makes sense. It's just not. It's not. Seems pointless. It's a lot of work.
It is, yeah, it's a lot of work. And so why I said that that brings me to this slide here. You see, this is a comparison of what it would look like for each type of allocating overhead. For the single plant-wide rate, it's $800 for each, right? For the multiple productions, it's a little different. $938 for snowmobiles, $662 for the riding lawnmowers. But then it gets really granular with activity-based costing. $1,294 for the snowmobiles and $306 for the riding lawnmowers. You can see that with the activity-based costing, in comparison to the other methods, activity-based costing is really the most specific and probably the most accurate, instead of just doing this kind of like blanket allocation. The reason why companies would use something like activity-based costing instead of one of these other methods is because we want to get to a point where we're being very precise, very specific in our allocation for costing. This will end up saving us cost over time in comparison to these other methods because we're being very specific. And you're right, it's a lot of effort to get to that point. But Elias, the reason why we do it is because we want to be as specific as possible so that way we know that we're not wasting cost in allocation using these other methods.
That makes sense.
Yeah.
Hey, so I accidentally read the lean manufacturing one because I didn't have this chapter. So but if you're doing like lean manufacturing, wouldn't that make like all this kind of stuff like irrelevant? Because you gotta like
Not really, because Elias, the reason why it would still be relevant, and the reason being is because of your labor hours. With lean manufacturing, as you know, the whole concept behind lean manufacturing is to eliminate waste. And so to do that, what we're doing is we are making modifications to our products to make them more efficient. We're also keeping less inventory on our books.
yeah. So
So on.
activity-based will work for that. Yeah, that makes sense. Activity and
Exactly. Yep. So that's actually what they would use in lean manufacturing is activity-based costing.
all right. Yeah, that makes sense.
Yep. Good point. Very good question. Okay, so as you would expect, there are some dangers to product cost distortion. Distortion, as you know, is the difference between these concepts, between these allocation methods. So if we use single activity-based costing, there would be a significant difference. We would be undercosting our snowmobiles by $494 and over costing our riding lawnmowers by $494, which is the difference between activity-based costing and the single plant-wide method. So this would result in a potential loss in sales dollars, right? Because if I'm underpricing something, if I'm understating the cost of something and overstating the cost of something else, with that overstatement, I'm losing potential revenue for each unit being sold because I'm allocating too much an overhead cost to that product. And so that's why it's really important that we look at the differences between these overhead allocation methods to really get granular, which will help us to not over or under cost our overhead per unit. So, and of course, this overcosting or undercosting for overhead per unit may also result in something being overpriced, which means it will be undersold, right? So if the company uses activity-based costing, its product costs will be more accurate. That's why we use activity-based costing, because it's more granular, it's a lot more detailed, it's a pain in the butt to do, but at the same time, it makes things more accurate when it comes to costing. And it helps us to make better decisions in the long run when it comes to pricing. So with respect to selling administrative expenses, and that's something that we really didn't touch on yet, is that according to the GAAP, generally accepted accounting principles, we're required that selling administrative expenses be reported as periodic expenses on our income statements. However, selling administrative expenses may also be allocated to products for managerial decision making. We talked about this in earlier chapters, remember? uh, this is where we talked about absorption costing versus periodic costing. I'm sure you guys remember that. I think it was like chapter 21, I want to say, something like that. And so one method of allocating selling administrative expenses is to the products based on their sales volume. However, the products may consume activities in ways that are unrelated to sales volume. So when this occurs, activity-based costing may be more accurate method of allocation with respect to selling administrative expenses as well. So here's an example. Let's assume this company produces two products. Both products have the same total sales volume. However, the products consume selling administrative activities differently. So essentially what this shows us is that with respect to selling administrative expenses, based on the selling administrative expense activities, we can apply selling administrative expense activities to each product differently as well. That's basically kind of showing this concept. So if this company selling administrative expenses are allocated on the basis of sales volume, then the same expense would be allocated for both products. However, the opposite would be true looking at this in terms of sales volume. So that type of allocation may not be the best. Using activity-based costing, however, for selling administrative expenses would be more accurate based off of how each product is consumed with respect to activities. This kind of reinstates how we would do this. So we assume that this company has a warranty service activity and it's budgeted for $150,000. And we estimate that 100 claims will be made for during the period for warranties. And so this is how we would apply this concept of activity-based costing through warranties. We would take the total budgeted amount, the budget activity cost, which is in this case is the budgeted warranty amount of $150,000, and we divide that by the activity base, which in this case is the estimated warranties claims that we expect during the period. So you take your $150,000 in total budgeted for warranty of service divided by the estimated number of claims, which is 100, to get us to $1,500 per warranty claim, which would be our activity-based rate for warranty claims. And you can really do this same concept for pretty much any activity base in any company. The formula is really always going to be the same. So once you have the formula down, you'll be okay. This example is a little long, so I'm going to skip it. Okay, so what about a service business? We looked at it from a manufacturing business. Well, let's look at it from a service business, like like a dentist or a lawyer or an accountant. So service business. For service companies, the use of a single and multiple department overhead rate methods may lead to distortions to those of manufacturing firms. So many service companies use activity-based costing to determine the cost of services. So let's take a hospital, for example. In a hospital, the activity-based costing is used to allocate overhead to patients. This hospital applies activity-based costing by first identifying the activity, second, determining the activity rate for each activity, and third, allocating overhead costs to patients based on the activity-based usage. So the hospital identified the following activities. We have admission, radiology testing, operating room, pathology testing, dietary, and laundry. So let's assume the following. Each activity has an estimated patient activity-based usage. the budget for radiology testing is $960,000, and the total estimated activity base is 3,000 images. We expect to take 3,000 images during this period, and the budget is $960,000. So to get the activity rate, as you would imagine, we take our $960,000, which is our total budget for radiology testing. We divide that by the number of images we expect to produce during that time frame, which is 3,000 images, to get $320 per image. So that would be the activity rates for all other activities we determined in a similar manner. We will do the same concept, right? And so we have admissions, radiology, operating rooms, pathology, and dietary and laundry. And so we can really determine the activity-based overhead for each activity in the hospital for each patient. And we could apply that to each patient. And that's really how it works too in the vast majority of hospital settings. So these activity rates, along with patient activities, base uses are used to allocate the cost to patients. So what we do here, the activity base allocated to each patient, we take the patient activity base usage and multiply that by the activity rate. So in our example, we have a patient in the hospital. The hospital overhead services or activities are performed on this patient by the following. We admitted the patient once. We did 2 radiology tests. The patient spent 4 hours in the operating room. We did 1 pathology test on the patient, and the patient spent 7 days in the hospital, consuming meals for 7 days and respective linen changes for 7 days. Based on the preceding services, the hospital overhead allocated to this patient was $2,790, and we computed it by doing the following. We admitted the patient once. The admission cost was $180. Radiology, we took 2 images in radiology at $300, $320 per image. That's $640 for this patient. The patient spent 4 hours in the operating room at $200 per hour. That's $800 for the operating room overhead cost. Pathology testing, we took 1 test at $120 per test. That's $120 for this patient. Patient spent 7 days in the hospital. For meals for all 7 days and laundry for all 7 days, that's $150 per day. That's $1,050 for food and linen changes. If we add all these together, for this one patient, the activity-based cost was $2,790. And so the patient activity costs can be combined with the direct costs such as drugs and supplies. These costs are the related revenues that can be reported for each patient profitability report. So in a profitability report would look something like this. So here you have your respective patients. Let's look at our patient, okay? We billed their insurance $3,300. The patient costs, we had drugs and supplies of $200. The admission was $180. We performed radiology tests. The images, we got $640 there for 2 images. The operating rooms, she was there for 4 hours, so the $800 there. The pathology testing, 1 test, $120. Spent 7 days in the hospital. Food and laundry for the linens was $1,050. Total patient costs were $2,990. We take what we billed the insurance, $3,300, minus the patient's cost, $2,990, to get the hospital potential income from operations for that patient of $310. And this is how it works in real life. This is exactly what you would see if you worked in a hospital setting in billing, for example. So let's look at this one more time from another example. This is our last slide. The radiology clinic uses activity-based costing to determine the cost of servicing patients. There are 3 activities: patient administration, imaging, and diagnostic services. The activity rates associated with each activity are $45 per patient visit, $320 per x-ray image, and $450 for diagnostics. We have a patient that went to the clinic and had 2 x-rays, each of which was read and interpreted by a doctor. What was the activity-based cost for this patient? So it says that this patient had 2 x-ray images taken. We know that's $320 per x-ray. So that would be $640 for the images. And it says that it was read by a doctor, which I believe is part of diagnostics, $450 for diagnostics.
900, I think.
That sounds about right. So let's take a look. Yeah, 900 for diagnostics, that's right. So what we would do is there's patient, and so since they're a patient visit, $45, $640 for imaging, $900 for diagnostics. You add all those together, the patient's total activity cost was $1,585 for that one visit. Very good. Cool. Yeah, that was fun. I thought it was fun.
Capital analysis was more fun.
So let me ask, so having gone through this chapter and now understanding that how the importance of activity-based costing, are there any questions on the activity-based costing concepts that we had covered in this chapter?
Nope.
At all? No? Okay. Well, that's good. That means you kind of got a basic understanding of it. So just to kind of recap where we are in time. So today's April 9th. The final exam is going to be on April 23rd. It's in 2 weeks. What will happen next week is we're going to cover chapter 27, the last chapter, on April 14th. April 16th is a holiday, so don't worry about class on the 16th. On April 21st, we're going to do a review for the final exam. It's optional. And then the 23rd will be the final exam. So what does this mean? That means all of your work, all of your homework assignments, your quizzes, all of that needs to be complete and submitted for final grading by April 19th. April 19th, that's the day before final exam week, okay? So again, if you are missing any homework assignments through Cengage or quizzes through Blackboard, they all need to be completed and submitted by April 19th. There will be no exceptions to that rule. So if you are behind in your work, what I'm telling you is that everything must be completed and submitted by April 19th. Are we clear on this?
Thank you. Yes.
Wonderful. Okay, great. Questions, comments, concerns?
I have a question. So since do we finish the semester in May? I'm not sure what day, but 8th May or something.
Something like that.
He'll be finished on the 23rd
So
Well, we do. For this class, we do.
class.
okay, so for this class, after the final exam, we don't have to. That's it. Okay.
That's it.
All right. Thank you. Yeah.
The only thing you'll need to do after the final exam is make sure to take that wonderful class survey that they ask you for in every class, right? So
We'll
again,
make sure to.
yeah, please do it. Please make sure to do that class survey when it does come up. Here's why. A couple of reasons why. Number one, it helps me because your feedback is, as I told you in the very beginning of class, when we first started this semester many months ago, is that your feedback helps me to improve as a professor. I take your feedback very seriously. And your feedback about me is super beneficial because it helps me to improve myself, okay? And it also helps us as a university to improve the course overall based on your experience with me and with the material in the course. So your feedback is really important to me and to the university. So please, please, please do me a huge favor and complete that survey when it becomes available. That would be very, very helpful. So I can't express that enough. Okay, so are there any other comments, questions, or concerns I can help to address at this time? No? Okay.
No, not really. But I do. You're not gonna put all this stuff on 26 up on the test, is you? Because that's a lot to try to remember to do.
It's there. It's on the test.
Oh Lord, hello.
5, 26, 27. It's on the exam.
Okay.
Okay. The slides will help a lot. Okay. I promise you that. Again, I did remove quite a few of the math questions from the final exam as well. So it's really just the concepts I want you to really understand. That's what we're testing for on the exam.
Gotcha.
Destiny is asking, so are both chapters 25 and 26 due by this Sunday? Yes. So yeah, Destiny, if you could have, I mean, I'm lenient about the due date, okay? So, you know, I know it's a lot, so just try to get it done by Sunday. If you can, that would be great. And I know that a lot of you have some extra time since you're home. So
you saying if you don't, everything is due by the 19th, everything has to be submitted.
everything. We're talking exams, I'm sorry, quizzes and all homework must be done by the 19th.
I've been finished, okay.
Quizzes and homework must be done by the 19th. So Destiny, yes, if you can, that would be great. If not, it's okay, but try to get it done as quick as you can.
19th.
Yeah.
Oh, okay. Well, I'm already done. I'm just waiting.
Great. Okay. Any other comments, questions, concerns?
Nope, that's it. See you on Tuesday.
Wonderful. Okay, everyone have a wonderful rest of your weekend, and see you all on Tuesday. I appreciate your time.
Thank you.
Bye.
Take care, y'all.